What's up traders? Today is Tuesday, October 31st and it's currently 11:05 a.m. Now this morning we had a nice win, on a gold trade for a gain of 1.5%. So we'll just go ahead and review that trade setup. So this was the trade right here. And if we go ahead and do the chart replay mode so as to review the trade. So here we had a test and rejection entry over double buy SAR zone in the direction of the daily bias. Now, what is the daily bias on gold for today? So daily bias on gold for me still bullish because the last daily closure of an SAR level was bullish. So this morning gold came and tested this zone. So this first candle tested this double buy SAR zone. So that's your test candle. Then the rejection candle also came, tested the same zone and closed above. However, the entry validated a bit too far from the SARs. Now, my thing is that if a trade validates this far off, I always ask myself, how far is the entry relative to the SARs you're trading? Now here, the entry, as much as it was valid, relative to the SARs is like 100% of my stop loss. So that is a red flag there and shows overextension in price. So what you'd ideally want to wait for is for price to retrace to your SAR zone, and then you look for an entry either on the 1 minute or 5 minute time frames on a live SAR. But also we need to know if there was a person who entered the trade on candle closure or on validation, at what point would they be setting break even for their trade? So let's assume there's somebody who did not care about overextension and took the trade on validation, because the idea here is that you want to do your markup there, and then you would want for price to come and tap you in before it gives this person a 1:1 risk to reward. So we've already done those two setups, and we've already done I'll just use this one. We've done our markup, so we would want for gold to come back and retrace here before going up there. So here we see that price would have started automatically giving retracement, and you can see for this person who would have entered on candle closure, they would have come close to getting stopped out. So this is the idea behind waiting for a retracement. So right here, let me go back right here. So at this point, we would want for gold to come to this zone, test this zone, and then on the 1 minute time frame, give us an entry on the 1 minute time frame. So now, since we're going to the 1 minute time frame, we are not interested in extended SARs. So when we drop to the 1 minute time frame, here we are interested in a 1 minute live 1 minute SAR, but we need this zone to be tested. We need this 1 minute candles to come to this zone first in order to test that zone. So you can see this candle, we've already gotten that test. Now we need a live 1 minute SAR, and there it goes. So that live 1 minute SAR forms. Now we need 2 consecutive candles to close above that zone since we're looking for a buy. We keep waiting. Now that candle closed above, so that's our first candle. Now we need the next candle to close above that zone as well. Perfect. So when this candle closed above, and this was during the live session, I went ahead and said I was buying gold with a 0.75% risk. 0.75% risk, 30 pips stop loss, 60 pips TP. So at this point, we were in the trade, and you can see this trade had ideally no drawdown. And at this point, the trade achieved a 1:1 risk to reward. So keep in mind, when your trade achieves a 1:1 risk to reward, you go ahead and set break even, because for us, we normally do a 1:2. So when you're at a 1:1, you go ahead and set your break even. So at this point, we were already at break even for the trade. And then we had a nice spike of gold that went to full TP right there. And actually gold kept pumping up from this moment on, and I guess just now is when we are having a retracement. So you can see gold kept pumping up. So that led to us having a gain of 1.5% for the day. So you can see Tuesday right here, and this is the last trading day of the month and the last day of the month actually as well, and you can see we are up 4.5%. with starting in drawdown during the start of the month, the first few trades were drawdown or stop loss trades or break even, but we got our footing back and we were able to close the month up with 4.5% gain, which is a nice increment, 2% increment from the last month. So this is all we are about, just progress and learning. But anyway, I will catch you guys in the new month of November, and let's see what that month has in store for us. But until then, I'll catch you guys in the next one. Peace. What's up, traders? Today is Tuesday, November 1st, and it's currently 5:06 p.m. So today I did a live stream for the FOMC session. So today we had one of the major news events of the month, so which was the FOMC release, which normally has a funds rate, and also 30 minutes later they normally have a news conference where the Fed Chair Powell talks about the decisions they made regarding the federal funds rate. Now there was a trade setup during the live session, and this was this zone right here. So this zone right here, if I extend my SARs, it was a double sell SAR. So bias today, US 30 was still bearish, gold still bullish, EU bullish, the US dollar bullish. So I was looking for, actually I'm sorry, yeah, this is that chart. So this zone right here we had actually was a quadruple. So you see we have two SARs right there, and if we zoom to the left we have two more, so it's actually at a quadruple zone. So this was the test candle, this was the rejection candle. Now the entry would have validated down here, but this price was overextended at this point, because if we were to take the trade there, you can see our entry relative to where the SARs are like 100% of our stop loss. So that's a major red flag. So at this point I said we needed to go down to the 1 minute time frame and then look for an entry on the live SAR. So when we go down to the 1 minute time frame, again we do not extend the SARs. So here when we go down to the 1 minute time frame and we do our markup there to show us what zone we are trading. So this was a test and rejection sell, and it moved from a possible test and rejection to a definite test and rejection right there. You move down to the 1 minute time frame. So here we needed to wait and get like a 1 minute. So we needed price to retrace to our zone, SAR zone, which is here. So price retraced down, retraced up, and then kept going up. So as price kept going up, I let the people know that we needed for price to come back down after it went up and create a live 1 minute SAR zone. Now here the live 1 minute SAR was created, and at this point we needed two candle closures below this zone, two consecutive candle closures. So you can see that's candle number 1, candle number 2 also closed below, and at this point when this candle closed, I said I was selling US 30, and because it was during heavy news periods like FOMC, NFP, I normally don't prefer people trading using the same amount of risk we normally do. So normally my risk per trade is like 0.75%, but during FOMC and like NFP, when you have abrupt or erratic price movements, sometimes you can easily get stopped out. So I really don't want people to be risking too much. So ideally for this trade, I said was going in a US 30 sell, 0.25% risk with a 50 pip stop loss, 100 pip TP. Personally, I went in with a bigger lot size, but for purposes of recording the official trades, I said this was a 0.25% risk. And you can see trade started off in profit just instantly and achieved 1:1 risk to reward at this point, because already achieved 50 pips TP. So at this point I went ahead and asked people to set break even for this trade. So this trade was at break even right there, and then we let the trade run, and you can see the trade went instantly to TP and didn't have any drawdown. So that was a nice, so we were risking 0.25% and we were able to make 0.5%. So you can see that's for the day today, Tuesday. We are up 0.5%. Is the first trading day of the month, so that's pretty good. And we'll see what the rest of the month holds. Now let's see what else. Yeah, that's US30. But anyway, other than that, I will catch you guys in the next markup. All right, guys, peace. What's up traders? Today is Friday, November 3rd, and it's currently 4:59 p.m. Back again doing another recap. So the trades I'm about to recap are trades we took yesterday, which was Thursday, November 2nd. Unfortunately, both of them resulted in a loss. It was a small loss of minus 1.125%. So if you go here in the tracking, so that was yesterday, Thursday. So we had a loss on gold for minus 0.75% risk, and then we took a loss on US30 for minus 0.375. So putting those together, you get a minus 1.125% risk. So the first loss we took was this gold trade. This gold trade yesterday, which was during the live session. So here we have a double SAR zone in the direction of daily bias. So as of yesterday, daily bias for gold, we had bullish. US30 was bearish yesterday, but as of today, US30, as of close of candle yesterday, US30 turned to bullish. But before then, I was still bearish on US30. So during the live session, there was this setup here, and this is a test and rejection entry. So this is test and rejection buy. So it's no longer possible test and rejection. So it was a test and rejection. Now here you can see your test candle. That's your test candle, and this is your rejection candle. So ideally you'd want to enter on the close of this candle. Excuse me. And this entry was next to the SARs. So at this point I said I was buying gold with 0.75% risk, 30 pips stop loss, and 60 pips TP. But unfortunately, the candle started off heavily bearish and went out and stopped us out on that trade. So that was the minus 0.75% loss. Now also during the live session, we'd identified other sessions down here, or other zones down here. So we had a good amount of SAR zones. This was another one, and this was another one here, the one below it, and all the way down here. So we had also identified another optimal zone, which was around 1980. So but anyway, that was the loss we took on gold, and gold eventually came down to the optimal zone and reversed back up from there. And even during, I think excuse me, later on in the night and during NFP, gold reversed from there. So if we zoom out, you can see got manipulated in that position, and then price went back up. But it's just a matter of timing. So most of the times, by using that daily bias, even when we are wrong, we're not like overly wrong. It's not like gold melted for the rest of the night or whatnot. But you can see here we just got stopped out, faked out. There were people who waited on this entry down here. Again, during the live session, I'd mentioned that this was the optimal entry as well. So it's just this was a valid trade. So would I still have taken it? Looking back, yes, I would. But also I would have also taken the one at the bottom, which was the optimal entry. And you can see where gold is today. But anyway, that was the trade, the loss we took yesterday for minus 0.75. And then later on in the day, we had this US30 setup. So remember, as of yesterday, US30 daily bias was still bearish. However, here you can see we had a double SAR zone, sell zone as well. This was based off of some prehistorical SAR zones to the left. So went ahead and marked this up, and this would have been now a break and continuation entry for sell. And the break candle would be this one, and this is your continuation candle. So there you see is have a break and continuation, and when I saw this, I waited for price to retrace a little bit up, and then I went ahead and sent it to the Discord. So you'll see here I said I was selling US30 now with 0.375% risk and 100 pips TP, 50 pips stop loss, and you can see that's the trade setup right there. So we got tapped in. Price started off in a little bit of drawdown, came back into profit and started ranging between break even and drawdown. Got some profit up, but price had a hard time coming back down. And at this point, when I saw this engulfing candle, at that point I sort of expected to get stopped out of this trade, which is exactly what happened. Got stopped out, and US30 kept pumping up for the rest of the night and even through NFP. So for this one, you can see this one, it actually did not come to our back to our bias. But anyway, even for today, the bias had already shifted to bullish because we had that daily candle closing above an SAR level. So yeah, so normally I risk 0.75% per trade. My max loss that I take for the day is like 1.5%, so that means I would have to lose 2 back-to-back trades in order to be done for the day. And if you look at the results, you'll see that was my losses for yesterday here. Took that loss on gold and that loss on US30, and this to me was yesterday a 1.5% loss. So I know the result I put 1.125, which is the reason for that is if I send out a trade, an official trade in the Discord, or I take an official trade in the live session, and the first trade ends up in a loss, we already have minus 0.75%. So normally I don't want members to enter the next trade that I do send in with minus 0.75, ideally, because you want to keep your daily losses not more than 1.5%, because once you start pushing that 1.5 threshold, you can start digging yourself into a hole. Another reason for that is because we also have a nice risk to reward strategy. So we have a 1:2 risk to reward strategy. So even though, like yesterday personally, I was down 1.5%, if I win another trade with 0.75% risk, I would get back the losses from yesterday. But for the members out there, normally when we take the first loss, I normally advise them for the second trade to not use 0.75% risk, but to use half of 0.75, which is 0.375. So that's why I have it there at minus 1.125. Also because I put it in the Discord that risk 0.375% per trade. But anyway, so for the week so far, we are only down minus 0.625. That's also given that we had a win on Wednesday during FOMC. So it's not a big loss. It's nothing to be concerned about. And we've started off some months with way worse. But we'll see what the rest of the month of November has for us. And that should be it for this weekly recap. I will catch you guys next week. Happy weekend. Safe trading. Peace.